welcome back for this latest episode of the weekly news on the For the Property Investor podcast. How are you today?
I'm going very well, Owen. Great to see you.
And Nick, tell us a bit about yourself again and what it is you do.
Well, I'm the owner of Hunter and Scribe, which is a copywriting agency that writes content for property and finance professionals like buyers agents, mortgage brokers, accountants, financial advisors, lenders, and credit repair agencies.
Great, and that's why you're here, because you know the news and you write it on a daily basis. And yes, my business is Leafield Real Estate. We're a national property management business, so we're talking to investors all day, every day, and loving these conversations we're having every week. Nick, we're getting a lot of feedback on the socials, glad we can have this conversation each week. But let's take it away. What's in the news this week?
Well, we love talking about property investors, so let's start there. Investors retain control of rental market. Australia's vacancy rate fell from 1% in December back to a record low 0.8% in January, according to Domain, following the seasonal rise that tends to occur at the end of each year. The city-by-city breakdown in vacancy rates was Canberra 1.5%, Darwin 1.3%, Sydney and Melbourne 1%, Brisbane 0.8%, Hobart 0.5%, and Perth and Adelaide 0.3%. So things are really tight. Owen, what are the consequences of having such a tight rental market?
Well, the consequences are that yes, rents will go up in those areas. But what's interesting to look at is the extremely tight markets are isolated to one or two. And it's not a surprise that we're looking at Perth and Adelaide there as the tightest markets, and because that's what we're seeing on the ground as well. It's interesting to see, though, that especially Sydney and Melbourne and even Brisbane, that's been an improvement there. Things are a lot easier in those three capital cities. So again, we need to look at the fact that this is an average. There are isolated markets that are tighter than others, and what it doesn't take into account, this is the capital cities. So it doesn't take into account the regional areas that were very tight during the COVID years. And have become a lot easier to find a place to rent now. There are opportunities for renters struggling to get a property. They might just need to look further afield. But yes, what we're hearing on the ground, especially in Perth at the moment, it's so tight. It's so difficult to find a property. And yes, we're dealing with multiple applications on all properties that are up for lease at the moment.
I know your business, Leafield, operates in multiple states, so you've got a really good picture of what's happening on the ground in different parts of Australia. Are you seeing any signs that the rental market is easing?
Yes, most definitely. As I just mentioned, it's especially in some of the semi-regional areas, so north of Sydney and Central Coast, Newcastle, Hunter Valley. During COVID, those markets were extremely tight, and getting multiple applications on all properties. And now it's a bit more of an even market. Rents have even come back a bit from their peak, so there's a bit more choice. In parts of Sydney, yes, there definitely is. Brisbane, which was the hottest market in the country for a long time, now it's Perth. But Brisbane, it's a much more moderate market, and you can't overprice anything. If properties need to be priced appropriately to be able to get inquiry. and applications. So there's definitely markets that are changing and that are leveling themselves out.
Okay, well, that's interesting. So you've been talking about the link between vacancy rates and rents, and you've also mentioned that things are easing, but I guess they're easing from a really, really tight position. So even a bit of easing is still tight rather than balanced. Vacancy rates presumably can't stay this low forever. Do you have any ideas about when we might start to see a balanced market?
Yep, it will. It's just going. When is the big question that no one really has an answer for, because what's going to fix it is the only issue is the only answer is supply. So we need to increase that supply. There's a lot of talk in the media, both mainstream and socials, about, well, yeah, we need to put rent caps. Even the government's talking about it, and around the country. So we need to consider the consequences of putting these restrictions on the market forces. I know a lot of people don't like to hear that word, and they don't want to allow the market to set itself. But we're at a stage now where there are protections in place for tenants, um, um, and there should be, absolutely. But when it comes down to gauging pricing, if property values are going up and rents aren't, then that's going to restrict a lot more investors getting into the market. And I know, again, there's a lot of people wanting to restrict more investors buying, because they feel like it's taking opportunity away from owner occupiers being able to buy, and first home buyers being able to buy and get out of that rental market. But we need more properties in the rental market to be able to take the pressure off rental prices going up even further. So it's not a black and white answer. It's not a red and blue answer. It's always in the middle. So yeah, and we shouldn't be getting politics involved, and that's why I brought up the red and blue, because the answer isn't red and the answer is not blue. It's somewhere in the middle. But we need the politicians and we need everyone within the industry to be able to make these decisions in a way that are sustainable, to be able to keep enough rental stock in the market, and also to be able to provide enough properties for owner occupiers who can afford to buy buy as well.
Interesting that you've been talking about supply and demand, and we seem to bang on about this every week. I'd like to that kind of leads on nicely to our next story, which I think is looking at supply and demand from a different angle, and I'll be keen to hear your thoughts on that. Home building approvals fall 24%. The number of home building approvals remains at low levels, pointing to a shortage of new housing in the not too distant future. A total of 13,085 home building approvals were issued in December, which was 9.5% lower than the previous month and 24% lower than the previous year, according to the Australian Bureau of Statistics. So as I said, 13,085 approvals issued in December. Over the past 15 years, an average of 16,040 approvals have been issued each month. Approvals numbers have now been below this long-term average for 12 consecutive months. So Owen, I'm wondering, if home building approvals and therefore home building activity remain at low levels, what will that mean for future housing supply?
Yeah, it's a big problem. Hopefully it's a short-term issue after home approvals had increased due to backlog after the COVID years. But yeah, it's going to make the current problem even worse, from a housing pricing point of view, as well as house prices, as well as rental prices. Shortage of stock affects everyone, whether they're trying to buy or whether they're trying to rent. So it's not just something that's affecting renters, and everyone who is in the market. And let me make this clear: like we need investors to be buying properties, to be able to supply properties to people who need to or want to rent. Not everyone is in a position to buy.
Mm.
They might not have the deposit. They might not have the finances to be able to get approved for a loan. So it's not an easy fix. So it's the long-term future of housing supply is. I mean that's the number one issue. If that was the only focus of everyone who's looking at these issues, then we might actually get it fixed.
So you've been talking about supply being low. So I guess supply can be low, or it can be high, or it can be balanced. Is low housing supply, the low housing supply that we've got now, is that a problem? And if it is a problem, can anything be done to solve it?
It is a problem. It's because we can't sustain. Even though I'm in this industry and people might think that I'm wanting prices to keep on going up and up and up, it's I don't, in a unsustainable way. Yes, we need to keep up with inflation at the bare minimum, and investors are there and to be able to make money out of their investment. But it's short-term gains are nice, but you can't sustain this double-digit growth every single year. It's just unsustainable, and it's not good for the economy either. Because it gets overheated, and then we have inflation issues. So it's whether you pump money into the economy in a artificial way, like the government did during COVID, during the COVID years, where they were handing out cash, and then they overstimulated the economy by dropping interest rates to basically zero. It's that put more money into the market. If you have a property market that is going gangbusters, and you're able to, and people are able to borrow against these new values and pump more money into the economy, that can have an inflationary effect as well. So it's not healthy in a long-term situation, and it needs to level off, and in some respects even come back, just so it's sustainable for everyone within the economy. So what can we do to solve it? We need to solve the supply issue, number one, but that's a long-term issue. So to be honest, it's probably above my pay grade. It's of how to solve that, but it's so that this is probably one area which does need government intervention. So I'm all for government intervention where it can make an actual difference to the macro environment that we're wanting, that we need to fix. These band-aid solutions of capping rents and taking away grants or whatever it might be, or offering grants in the first place, it's all they do is have short-term fixes that have unintended consequences, and that are always negative consequences. So it's that's the problem. So we need to fix the macro problem, which is these building approvals and getting more supply into the market.
Okay, well, let's say, for argument's sake, that the supply of new housing continues to remain low in the years ahead. What would that mean, first, for the sales market, and second, the rental market?
If supply remains low, then we're going to continue seeing prices go up. And I know that the knee-jerk reaction from a lot of people is to say, well, let's cap it, let's stop it. And but the unintended consequences of that is that, well, people will sell. Yeah, you have to give people the freedom to sell their properties. So what you the next solution, the next Band-Aid solution would be to, well, stop everyone from selling. And it's just like, well, if you do that, then what if they can't afford their loans? And it's just like, well, force the banks to not pay them, charge the interest. This is like, well, what's the unintended consequence of that?
Mm.
Yeah, the banks can't pay their money, and we're living in a very robust economy where everything is linked. You make one little change, and it's that butterfly effect.
Let's look at things from a slightly different angle with our final story.
Yeah.
Government changes rules for foreign property buyers. The federal government has introduced legislation to adjust the foreign investment framework. Under the new rules, foreign investors will have to pay higher fees to buy established homes, so they're incentivized to buy new homes. Foreign investors will have to pay increased penalties for leaving their properties vacant, so they're incentivized to put their home on the rental market. And foreign investors who want to invest in build to rent projects will now pay lower application fees, so they're incentivized to support housing construction. What do you think of these changes, Owen?
To be honest, they're not too bad. It's when we look at I mean, yes, paying higher fees to buy established homes and so on. I mean, that's just a tax grab, and to try and disincentivize them from buying in the first place, which is fair enough. They might as well do it at the same time. But foreign investors having to pay increased penalties for leaving their properties vacant. Yeah, I don't think that's a bad thing, especially in this environment. That's one thing that they could do now, and I think it's sad to see a lot of holiday houses in some areas which are left vacant. There's a lot of housing that is left vacant because someone will own multiple properties, but they don't want to rent them out on the long-term market. They don't even want them renting them out on the short-term market. They're just there for when they feel like using them. Now, that's their right to do that because they own it. But in this rental market, there's obviously not enough of an incentive financially for these people to rent their houses out. So how do we incentivize them to do that as well as the foreign investors? So, but foreign investors are a start, but it's still just a small portion of the market. Every little bit helps though, but there seems to be a lot of bashing of foreign investors when it doesn't make a huge difference to the market. But again, every little bit helps.
Well, this is the thing. So, as you say, foreign investors, they are a very small share of the market. I don't know the exact figure, but I believe it's low single digits. So, the
Mm.
overwhelming majority of people who buy Australian real estate are Australians. So, I'm wondering, even though you think these government changes are positive, is the government just tinkering around the edges?
Yes, it's like, yeah, going back to the previous story, it's like if they just put their whole focus on fixing the supply issue, that would make 10 times more difference. But they want to be able to make changes and make some changes quickly. And this is one small way that they can at least be seen to be making an effort to make a change right now and make a difference right now, which is all well and good. But in terms of the fixing the overall issue, it's not going to make a huge difference right now.
You know, I'm thinking, Owen, if the day ever comes when we have a balanced sales market and a balanced rental market, we're not going to have anything to talk about.
Well, hopefully there's more positive things to talk about.
Well, thank you again for a great chat.
All right. Thanks, Nick. And where can most people reach you?
Well, if people want to reach me, I'm very active on LinkedIn. So look up Nick
Yes.
Bendel, Bendel.
Great. And yes, and we're posting a lot of this content, not just on podcast platforms and YouTube, but also a lot of this content is going on LinkedIn, our Facebook page, as well as a few of the other social platforms. So thanks again for joining me, Nick. Another good conversation, and we'll see you next week.
See you next week, Owen.